It is another beautiful day in the markets. We are seeing a continued retrace on news out of Switzerland that, hey, guess what? Maybe the market's priced in too many hikes. We've talked about it before. We'll mention it again and much more today. On Money Never Sleeps. Fucking StreamYard lagging again. All right, welcome back, everybody. Before we get going, do us a solid. Hit that like button. Subscribe to the channel. Nothing Kevin or I say is financial advice, so please do your own research. Blah, blah, blah. Kevin, how are we doing today? We got, word out of Switzerland. All the big wigs had to go on their little, their sojourn over to Davos, and they're all having a grand old time. But how are you feeling on this wonderful Wednesday?
Man, I'm a little bit tired today, but in a good way, because I was up very late last night watching the Asian markets pretty much tell the world where we're heading. We're seeing red in the market. This is fun to see because for a month and a half, even almost 2 months, it was just nonstop green missiles straight to the fucking moon. And we all thought that we're all going to get rich again, right? But we're seeing a little bit of a retracement here. There's some things in the market that are telling us, maybe we did price in too many rate cuts going into this year. Some people are afraid of inflation right now. I'm saying none of it matters because we have pretty much created, or not us, but the Fed and other central bankers have created the perfect scenario in which doesn't matter if inflation goes up or down. We are heading for deflation and no one is prepared for it. And the fact we haven't seen a major correction already tells me that we're probably going to see a black swan that leads us into a downward trend going into 2024, 2025. So I'm doing fucking great this morning. How are you doing today? It's not even morning. It's afternoon.
It is afternoon. It's morning. I mean,
it's morning
listen,
in Switzerland.
I said this before the show. It's morning in Switzerland. It's it's late over in Asia, which I know is where you're spending a lot of your time lately. You're starting to sound. You've been sounding like Dr. Burry for quite a while, but now you're really like the money or the big short of him physically. So I don't know if that's a good thing or not, but just an observation I have made so far today, Kevin. Nothing has changed for me. I feel like I'm in Groundhog Day. I'm just like waking up. Oh, the markets are doing the same shit again. Nothing too interesting. Oh, there are more people saying what you and I have been, on the record, about for months now regarding the expectation around rates. And that's why we're seeing a bit of a pullback in the market today. It is being bought a little bit. We're seeing red across the board, but it was a lot worse earlier. Coinbase less than 1% down. Nvidia about 0.67% down. So nothing too terrible as of right now as this repricing is taking place. It's still just a reminder that I'm comfortable. We're just chilling. And, we have more data later this week. We have earnings really starting to kick off outside of financials. We did get the Schwab earnings. That was another one where I don't really get the buyback on this. If we want to quickly look at the chart there, but it's in front of me right now, and it gapped down 7% when the market opened, and now it's only down 1.8% today with disappointing earnings. We've talked for a while about why having money in Schwab may not be the best thing in the world. They've had they took over some of TD Ameritrade's trading desks, so there's that part of it. But yeah, nothing's really all that exciting for me in the markets today. It's just listening to financial bigwigs and hearing what they have to say about the state of the market and the economies over in Switzerland.
Definitely. Just FYI, because I'm not sure if you see it too, but it's definitely lagging a lot right now, StreamYard. But I can hear you, so if I respond a little bit later, that's just because there's a bit of a delay, but it's probably just all this shitty weather that we're experiencing, or maybe it's time to short Xfinity again. Who knows? But let's go into Schwab. We got the chart pulled up here, and yeah, this is a wild chart, is it not? I mean, look at how much it was down here. It was down $59 a share to start. At some point today, obviously, it started down here around 60, went down to about 59. Here we are now, sitting just underneath the 50 moving average on the daily. It's nice and oversold, right? It really is. It went down significantly. I look at this and I'm seeing, I could be saying that this is wave 1, wave 2, wave 3, wave 4, wave 5. We could have one more push up for Schwab and some of the banks, which absolutely sucks. Just to think that, yeah, we could see the banks push up again here. It's not fun when you see the rest of the world kind of collapsing in certain sectors, and then the banks look like, what? Technically, they could have one more push to the upside. But I'm going to make the case that we won't know until that actually happens. And I know that's obviously it's like no shit if we're not going to know until it happens. But I say that because we know what happened in China last night. The technicals should matter. However, it didn't, right? And that's something we have to keep an eye on with the problems with the banks. Now, with all the CPI and inflation fears that are going around, this is only getting worse for the banks because they need these rates down as soon as possible, right? Back in 2020, 2021, they were buying all these the longer end of the yield curve. They were buying all these treasury bills to the point where, hey, it was less than a percentage point of the yield, but they had all this money from COVID, all this stimulus, and now look at the 4-year right, or the 10-year right now. I mean, the 10-year is sitting, just above 4%. Even higher today, 4.1%. So they are losing out significantly. There's so many unrealized losses in the banking sector. And if these rates continue to stay elevated, well, obviously that's going to tighten their lending standards once again. And it's just stopping the creation of money. And eventually that's going to cause problems. I don't know if the central bankers know this or if they're just, hoping that they can get to November and then, chaos can ensue. But right now, when I see Schwab, I think, okay, this is going to go when it all decides to go. Maybe that's in March. Maybe that's in April. Who knows at this point? But the earnings itself weren't necessarily great. They lost over $1 billion year over year. I think the net, let me see what that thing was. The one guy was hilarious. From Stock Goat here on Twitter, he said, "Congratulations, Charles Schwab Bank, for an impressive negative 47% net income earnings year over year. $2 billion profit down to $1 billion. Solid job. Great leadership." You gotta love tweets like that. They just make your day. But yeah, obviously they're buying back. And they're gonna keep buying back. They're gonna keep buying back these dips because they don't think anything's wrong. The banks are extremely undervalued, but undervalued and cheap doesn't necessarily mean that it's got room to the upside. There could be another stop much lower first, and that's what our, I think, consensus is based off of what's going on in the banking sector, what's going on in the financial world, and now what we're seeing going on in Asia. It's all interconnected. It's just a matter of time before it all comes to the surface. And I think we're getting closer by the day.
I'm going to short fucking StreamYard. Jesus Christ. This is terrible today. All right. The lag is just brutal.
No,
all right.
I know.
Anyway, so we had Schwab today. I'm trying to pull up maybe it's my internet. I don't fucking know, man. I'm kind of looking ahead to more earnings throughout the week. We get Costco tomorrow, so we'll get an update on how rotisserie chickens and hot dogs are selling. I feel like in this economy, they're probably doing quite well there. Costco is one of those stocks where I feel like as things get tighter, people will look to get more out of their money, and Costco will be just fine. Like, they may be one of my favorite defensive stocks when times get tough. Like, we've seen it before. So, let's keep an eye on Costco. I think they're going to have good earnings tomorrow, and I wouldn't be surprised. I'm going to pull up. I haven't looked at the Costco chart I feel like I do this every 3 months. Earnings come out. I'm like, what the fuck's Costco up to? So let me take a little look here. It's pretty flat on the day. Oh,
yeah.
It's, I want to, yeah, man. Costco is right around all-time highs, which is pretty crazy. But, it's a lot of hot dogs.
It's a lot of hot dogs. And, everything's going to go down if the market does take a tumble. However, there are things that won't go down nearly as much. And again, it's kind of wild to think this, but a lot of these exchanges and even places like Costco probably will report great earnings, even if there is a bit of a dump in the market, because people will try to save money. And also people are going to sell, which causes volume to run through these exchanges where naturally it's just going to be good for the exchanges itself, even if people are selling off like crazy. It's volume that's coming in, even if it is sell volume. So right now, there are some defensive stocks that are probably unlikely to most people. I'm going to tell you which one is not one of those, and that is Spirit Airlines, because After being down 50% yesterday, it's down another 23% today. So clearly, buy the fucking dip
Oh
did not
God.
work. Did not work, guys. I think this was the thing that we needed to see in the market, and hopefully, it would have taken a caveman with a fucking big old club to hit people over the head to realize that, hey, maybe we shouldn't be buying these dips all the time because the outlook is pretty bad. It's pretty grim, and we're just lying to ourselves. Yeah, we beat earnings expectations, but the profits are going down. What does that tell us? Well, it tells us probably we shouldn't be buying the fucking dip. And I say that just because I think the markets are going to start realizing this. Asian markets better start realizing that fairly soon. We'll look at them next. But this is another one that people are like, let me buy the dip here. I saw some people saying like, I bought it 650. Let's see if we can ride it up. And yesterday, you got up a little bit. You closed around 793, but we're not at 793 today. We're at 603 as we speak, and we went as low as 580. Is what it is, guys. I told you I have no faith in going into buy Spirit Airlines right now. Just seemed like a very very bad buy the dip opportunity for the time being, especially with oil being how resilient it is, but not going up from here. Doesn't seem like there's a lot of demand, and the fact that Spirit Airlines, one of the airlines that I think people fly the most, is doing pretty bad. Well, then tells you people might be hurting even worse than we probably anticipate. Wait till we get some of those bigger earnings. And again, this is because of the merger, but we can take a look at United and American Airlines in the coming weeks and see how they're doing, because I wouldn't be surprised if they see some red themselves.
Speaking of airline stocks, did you see the guy on Reddit? No, the guy on Reddit who was on the flight, the Alaskan Airlines flight where the door blew off, and he was shorting the stock while on the plane. And he asked on Reddit if that's insider trading, if he's buying options while he's on the flight. I thought that was amazing. I don't know if it was true or not. I don't know if I believe that guy, but if so, that is a once in a lifetime money making opportunity and is absolutely brilliant. And there's no way that should be insider trading because he almost fucking died.
I wish I was on that flight now. I would have. That is the smartest thing I've ever heard in my life.
Everyone else is like praying to God, and you're getting on Robinhood trying to buy options.
Everyone's like calling their family, and you're just trying to connect to the T-Mobile in-flight internet, being like, all right, let me just get this for 1 hour so I could move some cash over from Bank of America straight to my Robinhood. Screw this fucking. We're gonna land in style today, boys. But that's hilarious, man.
Absolutely amazing. Yeah. All right. Let's see. I'm looking at, I want to take a look at the rate probabilities, and what the Fed says doesn't matter to the market, but apparently what Wall Street execs, when they parrot what the Fed is saying, it does, because now we are seeing for the March meeting, it is up to a 40% of no rate cut. Just yesterday, that was at 35%. So people are starting to listen once the big bankers speak. So maybe I think we continue to see that. Like, I still don't think we see a cut in March unless something really bad happens, which I know is that's your thesis right there. But barring an unforeseen or, what to many is an unforeseen event, I still think we're not going to see a cut until the May meeting. We have no meeting in April. May 1st is the third rate is when we see the first rate cut. Maybe.
Yeah, I expect one in May for sure.
What else? All right. What else is on the is on top of mind for you today? We have retail sales data. Right? Is that what you're going to next?
We're going to China.
Nope. We're going to China. Okay. Forget about the retail sales data. It was a little bit over expectation. So, people are still spending. It came in, 0.6% increase, higher than the 0.4 expected. But that's enough of that. Let's head overseas and let's go to China.
Yeah, I just don't believe those numbers anymore at this point, right? I mean, and should we believe the numbers that came out of China yesterday, that the GDP grew by 5.2% as opposed to, I think, expected 4.9 or something like that? I don't know. I don't think investors over there necessarily agreed with that data that came out either. We also saw that the unemployment rate subtracting the youth in China came in at, I believe, negative 14%. So definitely a lot of unemployment there. But yeah, I think a lot of the macro data in China is definitely impacting the price of what's going on there. Now, the really interesting thing was we had broken 16K right here yesterday, or the day prior to yesterday, I guess Tuesday in China. and it was down 2.16%, down 350 points. It's a really good close, right? We closed below 1600 and we didn't bounce back above it. Next day, what happened? We're down 589 points, 3.71% in the index for the day yesterday. I was watching it live and I was just like, I remember texting you guys late at night. I'm like, hey guys, this is down like 300 points right now. Oh, now it's 400. And then I just stopped texting because it was so late in the night. I'm like, this thing's down 645 points at one point, right? We bounced off this, and this kind of sucks to say, but we bounced off this key trend line, which goes back years. I'm going to pull this up right here. You can see that this trend line, we found support here in 98, found support here in 2003. We didn't get a chance to test it back in 2008, but we tested it in 2022, and we are testing it right now. Now, the question is, has anything in China broken yet? We don't know. But the other question is, it's gotten really bad there based off of their equity market. What happens when something really bad does happen there? Well, we're probably going to lose that trend line. So us being here and before tonight's open, I would anticipate that there is going to be some bids, right? Obviously, you're on historical levels of support. Last time it was here, we got on the monthly a 26.2% return. I don't know if we're going to get that. And again, I think it's because we broke this parallel channel. It could be a fake out, but I think there's still room to the downside for the monthly. And again, these things can stay overbought or oversold for a period of time. We still got that death cross. February 1st, that is coming. That is a certainty. There is no way we can reverse that at this point. But this is a really dangerous chart because, let's go to the daily, how fast we gap down, right? We found that support, like I said, off this trend line down here. But what if tonight we just don't find that and investors are continuing to be really scared about what's going on in China? We're 2 weeks away from the Evergrande, the hearing to pretty much finalize what's going on with their debt and if they're going to, liquidate assets. Well, the assets are getting cheaper by the day if this continues to happen, right, in the equity market. And not just the equity market, but also the real estate sector. We're seeing that there's just a huge demand for selling out of assets in China right now, and money is leaving the economy, going elsewhere in, international, whether it's here in the United States or it's somewhere else. But if we continue to see that, that means that it's going to be harder and harder to acquire dollars to pay off debt, and that's going to drive the dollar up. And that's what we're kind of seeing right now in the, in the forex markets. If we look at the yuan, because yuan is for China, the yen's also going up significantly like crazy, but the yuan is going up. And this is showing us that it's losing strength against the dollar. I mean, we're probably going to see this continue to find support on the 50 moving average on the daily. If we look at the weekly, let's look at the weekly real quick. There's plenty of room for this to go to the upside and keep climbing. So, I mean, it's very possible we could test the top of this trend line again, be at 736 by the time we top out around this. If things get even worse, we could say, screw this whole parallel channel that we've been trading in for, since November of 2020 or November 2013. I mean, we could be putting up even higher marks on the yuan. So I'm very interested to see how this plays out. This kind of gives me proof that the dollar is going to be really resilient, really strong here. And if we just go over to the other Asian markets, Japan, the yen is just climbing like crazy the past few weeks. Plenty of room to the upside on the weekly. We could be trading back in this channel with the Nikkei where it is. That just tells us that pretty much the yen is going to be weak because people are rather be in the equity markets over there than, in cash or in their conversion to cash. So I think that there's a good chance that we could be testing, even close to 160. I hate to say that, but we're 12 points away from that right now. I can definitely see us getting closer to that point if we start seeing a sell-off in the equity market, if China continues to open up and drop that shoe that we're expecting it to. And then if we look over to Europe, Europe had the hotter than expected CPI data out of the UK. That should have caused some concern and for the euro, where it kind of goes up because they're expecting that the rate cuts aren't going to come. We're getting a lot of talks about how rate cuts aren't coming for Europe. We don't believe that necessarily because we know that Germany is the one that's probably going to drive them to being forced to cut rates eventually. But we're below the 50 moving average on the daily. I think that we're probably going to come down and test the 200. If we don't hold that, I mean, it's going to trade in 5 waves and during this wave 3 down. If we don't hold that 200 EMA, we're coming down pretty deep. And if that's the case, the dollar, which is doing great, broke out of this trend line. I mean, this is 100% bull flag, broke out of it. We're testing resistance here on the 200 EMA on the daily. Maybe we get a bit of a retracement, but I do think that this right here could be our wave 3. If not, this is our wave 1, and we're just looking at some massive structure that could be catapulting us way higher, especially if equities continue to sell off in the US. So we're in a really interesting state of play right now. And part of the reason we see the equity market continue to sell off, and we might even see something worse than people are anticipating, is because the VIX is now at 15 points. It was up at 9.3% on the day. We're at 1501. I mean, the thing about the VIX is everyone was shorting the shit out of it at 12. Imagine when the VIX is at 20. All the people that are like, hey, I'm losing a ton of money right now. I got to get out of this trade. I got to cover my positions. So then the VIX goes up naturally because it's a squeeze. People have to cover their losses. And then more people are screwed
The
because
short squeeze is going to be nuts on this.
I completely agree. I keep tweeting.
Fucking StreamYard. God damn it. This is pissing me off.
I know, man. It's nothing worse than a fucking
You just keep
lag.
going. You just keep going. This is terrible.
All right. So, but what me and Jay would pretty much agree, and StreamYard can't stop us on this, is that if people continue to cover their positions on the VIX, what we're going to see is there's going to be a massive squeeze. This is going to margin call tons of people who are shorting the shit out of it down here. It was easy money shorting the VIX, and now they're going to realize what happens when you get too fucking greedy, and the VIX is going to pop off, and it's going to cause tons of problems. When does that happen? I don't necessarily know. We know that China is a very big concern we should have. The reason the VIX popped up this much is because of what happened in China overnight in the markets, right? Now we're going to have to see if any of the banking issues, if Evergrande, if anything that is a problem right now that it's starting to mount, bad data, bad earnings season. Like I said, there's a good chance we can get to 30. I said this right before the end of the year, 30 in the VIX by the end of Q1. I think it's very possible. I mean, shit, we're up 9%, 8.24% right now as we speak. Obviously, volatility is dropping as people are trying to trade this market. Good luck with that, guys. But I think that we are going to see this massive pump in the VIX. Margin calls are going to happen. Funds will blow up. And, this is only going to add more stress to the market than anything because people are just going to get too greedy thinking that the Fed has it under control and they don't. So that's a big trade, and it's kind of all intertwined with what's going on in the Asian markets. I think that we had to bring it up. The other thing I want to show real quick with Asia is this article that is from the Financial Times. Beijing tells some investors not to sell as Chinese stock rout resumes. This is from yesterday before the markets opened. Clearly, they didn't get the fucking memo out. No, it did not go well at all. So that's why I say we have to be careful when we see that, hey, this is a generational opportunity. We could buy this dip, buy the dip in China. I don't necessarily know if the technicals are the ones to rely on. This is when you have to be kind of an open trader and use some of the fundamentals and see what's going on in the world instead of just looking at your trading desk and expecting, hey, you know what, this on the RSI, this is that. And this is coming from someone who loves technicals. Gotta broaden your horizons and seeing the bigger picture here, because this is dangerous if you're going to be expecting a move to the upside and the Hang Seng drops another 4,000 points by 2025 and the year. So just something to keep in mind there. That's all I think I have on that front. Should we get into some of the crypto stuff now?
Yeah, let's move through that pretty quickly if we can.
Absolutely. I got nothing too crazy to go here. Also, before we start with that, yield curve, we just got to talk about that right now. Obviously, people are pricing in that there's going to be no recession or no rate cuts soon. However, even on a bad day yesterday, we did move up again. We're only 15 basis points away from reverting this. And I think there is going to be a bit of a pullback here before we move to the upside, but that's a good sign that the bond market will soon be pricing in not only a recession, but that rate cuts are coming in soon, and that's going to probably tank the equity markets at some point, especially once we get above that reversion. That's when we tend to see the recession actually materialize. There was a great video last night by Jeff Snyder, who does Eurodollar University on YouTube, and he did a really good job with talking about how recessions are really tricky and you can't necessarily price them in, because the way it works is everything will be fine for a while, and then all of a sudden everyone just recognizes all the bad data is bad data. Yesterday we got the New York manufacturing data, we got retail sales today, and also the CPI data that's coming out globally. Shows you that there's a lot of uncertainty right now, and we're going to be kind of primed for some bad moves ahead if we continue to see bad news be bad news. But right now, here we are with Bitcoin. It looks like it actually got bought a little bit today because it was much lower when I checked earlier. So it's finding support still on this 50 moving average, right? We were down about 42. Where was the low today? 42,269. Fuck this market, dude. 420.69. Just goofballs out here, just absolutely bidding Bitcoin's price up. But yeah, I mean, this is where Bitcoin is currently sitting. Now, the 4-hourly chart is really interesting. A friend of mine brought this up. Does this not look like it's ready to dump once again? We had this massive move to the downside. Now we're consolidating here. Unless this is a Bart Simpson pattern and we push up, maybe. But this
Now
tells
you're
me that
speaking my language.
Bart Simpson, yeah, I mean, I like those patterns.
Take
I think
it to
that
50.
there's a lot there's a lot of patterns out there. It could happen. It really could on these shorter time frames. I'm not opposed to that. You got the 50 and the 200 getting close here. We know that the market does not like death crosses. It likes to pump right before them, but there's a good chance that we could go a little bit lower and then we pump up. I think that's very plausible too. I also know that Grayscale is trying to dump pretty much all their Bitcoin. It seems, we keep seeing tons of Bitcoin hop onto Coinbase's exchange, specifically Coinbase. It seems like that's the one that's going to be hit the most in terms of how much liquidity they actually have. So I would keep an eye on that. That's going to be really interesting to see. But as we see this price, potentially look for a little bit down first and then a move to the upside, I think that we could get a double top. If we don't get that high, I say 45. I think 45 and people get excited around there, open up a lot of longs, and then we continue to push down from there. That would also tell us that we're putting in lower lows and lower highs. Sometimes that's bullish, but at the top of the move, it's not bullish whatsoever. So I'm not going to be too concerned about that. I think that's also going to offer a lot of opportunities too, because I think Bitcoin dominance could pull back for that and that allow alts to pump one last time, let all these bad boys get out of the market. And bad boys, we're talking about the exchanges who have tons of altcoin exposure. I think that they're going to have the opportunity to sell from higher. But again, anything can happen. I'm not getting too married on the crypto market. I'm still have zero exposure to it. Looking across here, let's take a look at the ETFs real quick. They're doing a great job, guys. They really are doing a great job out there trying to pair with the Bitcoin's price. I can't wait till
it bottomed. It looks like it bottomed, and now we're going right back up.
Yeah, it was only what, less than a week ago tomorrow will be 1 week exactly that we were sitting at the all-time high. We were at 29.63 to open. Clearly we're not there anymore. And here we are sitting currently at 24.37, and we're just bleeding out across the board, right? Every day, 2% down, 2% down, 2% down. It's a very, it's one half of the Burj Khalifa that we're looking at here. Grayscale, obviously,
I don't know what that means. It sounds like you just took a shot at Wiz Khalifa, but we'll keep it moving.
Wiz Khalifa. No, Burj Khalifa, that's the building. But that was a terrible joke. I'm sorry. You can tell I was up in China all night. But these ETFs suck. And it's the problem with trying to get exposure to the crypto market without getting exposure to the crypto market. If I want exposure to crypto, I'll just buy crypto. I think that's the lesson to be learned here, guys. These ETFs suck because they don't match the price on the weekends. The markets are closed here in TradFi. We know that they're pretty much derivatives. I think these things are going considerably much lower as they do finally track Bitcoin's price. It just ain't today, right? I think that maybe at the bottom of the market, it might be a good idea to buy some. Probably not, though. I'll probably just buy Bitcoin at the bottom of the market and say, go fuck yourself to all these funds that have these ETFs as products. What happens if they want to sell their Bitcoin, right? Because they don't want to get screwed. Well, then you're screwed holding the ETF. So it's pretty much what we're looking at when it comes to the crypto market. Nothing too crazy outside of that. Do need to keep an eye on this, though. This is gold. We were talking about how gold has a good move to the downside, and we were saying that weeks ago after it shot up to 2100. I know you saw my tweet with Peter Schiff. He's not wrong. People are definitely discounting gold right here. However, it's just he's too early in this move for it to be, him to be 100% right. I think gold will be really successful, but I think there is a massive sell-off. I think we need to go at least to the 1900s. I think we're going to go even into the 1800s for gold before we could start to, expect any type of correction. And that would kind of line up with a sell-off in the equity market and the dollar pumping, because once again, we expect that the dollar is going to rise before gold, and then gold will probably rise right after it. And, taking a look at TradFi at the end of the day, double top right here on the S&P. Could it push up a little bit higher? Yes, 100%. I think a lot of people are expecting the double top this way, but in putting in new highs, we just don't know if that's going to come with given earnings. Bad news seems to be bad news, and that could have been just a really great trap for a lot of people who are long up here just to get screwed over. But I recognize a double top anytime I see one. We continue to gap down and see pretty much a move down to the 50 moving average, and we don't get a higher high, then you kind of know which direction the trend of the market is going. NASDAQ's down once again, double top right there. And this is a double top right here in the Dow, so nothing too crazy. If we look at the Russell, everyone was saying the Russell 3000 for this year. Currently, it's 1900, and it's down. Let's see where it is from the height. It's down about 8% already to start the year. So we're having a great year in the markets. All the people that were saying that this is going to be a bull market year, show me.
Show him. All right. That is going to do it for today. Appreciate you for joining us, everybody, on this very laggy stream. God bless if you stuck it out with us. We really do appreciate it. We'll be back tomorrow. All right. No, I will not be back tomorrow. I'll be back on Friday. Kevin will be here. You'll love to see it. So come check that out. If you haven't yet, like today's show, subscribe to the channel, drop a comment. All of that good stuff is appreciated. Stay safe in the markets, and we will see you next time.
Take care, everyone. Thanks, StreamYard.